want to talk about the sticking point that you've been raising for a while now, and that is whether platforms are able or should have the ability to pay rewards on or interest on stable coins. This, of course, would be a key tool for you and the industry to convince customers to move money out of traditional banks and into crypto platforms, correct?
Yeah, so this stablecoin reward issue is very important, and I think President Trump has showed incredible leadership here, creating a strong crypto agenda. We just got the Genius Act passed into law, which actually did enable stablecoin rewards to happen. The banks had their own concerns, and we reached a good outcome in the Genius Act. And now the banks really are coming and trying to undermine the president's crypto agenda. I mean, these are the same banks that debanked him and his family, right? And they want to come in and say that Americans should not be able to actually earn more money on their money. They're trying to protect their own profit margins, taking money out of the pockets of hardworking average Americans and putting it into the coffers of these big banks that are hitting record profits. And so our view is that there should be a level playing field where banks and crypto companies can lean into stablecoin legislation as an opportunity. And that includes paying rewards to Americans so that they can earn more money on their money.
But the regulations and the guidelines that the banks have to follow are not going with them, right? I mean, things like, deposit insurance or other investor protections to ensure that you don't have a run on the bank. What about those guidelines that you would not face, and investors may not get those kinds of protections that are in place at a traditional bank?
Yeah, so you're right. The banks do have quite a heavy burden on regulation, and the reason is because they do something called fractional reserve lending. They don't actually store all your money at the bank. They're lending out a good chunk of it, and that's what actually causes additional risk, which can be these runs on the bank. Now, some people would say, yes, but there's FDIC insurance. Okay, that's great, but it's only up to $250,000. So if you have more than that in a bank, you can actually lose your money if there's a run on that bank. So I actually believe that fractional reserve lending, or fractional reserve banking, I should say, introduces more risk into the system. I think it's more risky to keep your money there. By contrast, under the Genius Act, stablecoin reserves are held 100% in short-term U.S. Treasuries. And so there is no fractional reserve with these stable coins. They should not be subject to the same regulation as banks. That's the world that the banks entered into to have the privilege of doing fractional reserve, which brings along this additional risk.
Yeah, it's interesting that you say that, because one analyst would say to the banks, interest on stablecoins could shift how the consumer liquidity is used, and instead of financing the private sector, stablecoins are actually financing the government, as the Genius Act restricts the investment of reserves to short-term Treasury securities, right?
Yeah, well, Secretary Bessent, I think, has been a big proponent of stablecoins and crypto legislation for that reason. It's creating a lot of demand for the U.S. Treasuries, which is important to bring down those interest rates. But I'd say, crypto companies actually have just as much of a right to go out there and do lending. We don't do it with a bank license with fractional reserve in the way the banks do. But if customers want to opt into lending out their own money, they can do that and actually, in many cases, earn better rates than they would get through a bank. So this is really just another example of crypto updating the financial system, whether that's with payments or lending or capital formation. And the banks need to have competition, right? Most Americans, something like 87% of Americans believe the current financial system is not serving them adequately. There's all these concerns about affordability and why aren't they earning more on their actual money that they're holding in these banks? And so crypto is providing competitive pressure for the banks to improve their products. They should lean into it as an opportunity, not view it as a threat and try to convince the Senate to ban their competition.
What about those banks that are getting shut out of all of this? I'm talking about community banks, smaller banks, those banks who are doing lending in agriculture, and the farmers who are relying on this kind of lending. Are they going to have the same access to these crypto platforms that you're referring to?
Yeah, so there's been a lot of noise made about community banks, and community banks obviously play an important role in many of the different congressional districts and in our communities. I believe that this is actually a red herring being used by the large banks to essentially put the community banks out there as the people who are being damaged. there's actually no evidence we've been able to find of any community bank losing deposits to stablecoins. In fact, the biggest risk to community banks is big banks. There's been deposit consolidation that's happened since Dodd-Frank over the last 10 years. People are more likely to move their community bank funds to a large bank than they are to move it into stablecoins. So I think that that's a red herring, and I think that crypto can do a good job of serving these communities as well. I wouldn't let the big banks put the community banks out there as a front man.
Well, I mean, I think that there's even more to this than these issues that we're talking about, because when you look at how the House treated this in terms of the Clarity Act, it was very clear in terms of the rules and the road ahead. If you're a digital commodity, you'll trade under the CFTC rules. If you're not a digital commodity, you'll be treated as a security. Is that right?
That's right. I mean, that's what Clarity did in the House, which got a strong bipartisan vote. We do feel that the CFTC and the SEC both have a role to play here, as there are crypto commodities and crypto securities, in addition to stable coins, right? And actually, one of the issues in the draft text was that it said the CFTC doesn't have as much authority anymore. Actually, all crypto assets, when they want to be listed, have to go through the SEC first, and only if the SEC declines to take it on after 60 days, then the CFTC can list it. So I just don't see how that can work. Both the CFTC and the SEC are important agencies. They have their own jurisdiction. The Senate Ag Committee, I can't imagine why they would make the CFTC a subsidiary of the SEC.
But was the Senate approach on this too complicated?
I think that, the Senate has done an incredible work here of trying to bring together a lot of different constituents to make sure that their voice is heard. The problem is that the banks are really trying to undermine the president's crypto agenda and take money out of the pocket of these ordinary Americans. And so there was, frankly, there was a giveaway to the banks. It went too far, and I felt like I had to speak up for our customers and the 52 million Americans who've used crypto to make sure that their rights were being defended. I'd say most of the rest of the industry agreed that there are major issues in this bill. I declined to opine on the exact, whether the markup should happen or not. I defer all of that to the Senate, but I did feel like I had to speak up on behalf of our customers and all Americans here. It just felt deeply unfair to me that one industry would come in and get to do regulatory capture to ban their competition. They should have to compete on a level playing field, and I genuinely believe that many of these banks are actually very smart. The commercial side of the bank is leaning into crypto. They're actually doing deals with Coinbase. We're powering a lot of crypto and stablecoin infrastructure for them on the commercial side, and then their lobbying arm comes to DC and thinks of it as very, very zero-sum and is trying to kill the competition. So I suspect, like many things, if we get the principals in the room, we can actually get this figured out and make a good deal. But I'll be reaching out to some bank CEOs in the next week here.
So you would be comfortable with that rewards item where you're able to pay rewards as well as the same amount of guidelines that the banks face in terms of investor protection and insurance on deposit. Would you be comfortable with having that kind of a regulatory framework for crypto platforms that the banks face as well?
Well, I think banks should be able to pay interest and yield on their deposits. That's something that they're able to do with their license. But again, their license is primarily there because they're doing fractional reserve lending. They don't actually have all your money there, and so that's what creates all that risk. I think there's nothing prohibiting us currently, for instance, of paying rewards on stablecoins, nothing prohibiting us from allowing customers to opt into lending out their funds if they want to earn higher returns. You don't have to be a bank to allow customers to lend out their funds when they opt into it. It's doing it without their permission, essentially, with fractional reserve lending. That's why you need a bank license.
Brian, let me switch gears and ask you about the company and your expanding breadth of products and the expanding breadth of the platform, executing on the Everything Exchange, prediction markets included, as well as stablecoin payments, as we've been talking about, and self-custodial wallet. Where does the growth at Coinbase come from just in the next 3 years, would you say?
Yeah, so we see every asset class coming on chain. Crypto is really updating the entire financial system, and that creates a lot of opportunity. The Everything Exchange is a core part of our strategy, like you mentioned. It started with just crypto trading. We now have millions of different crypto assets people can trade, but we also recently announced stock trading. You can trade commodities there. You can trade prediction markets. We want to bring every asset class on chain, and it can trade, 24/7 in more countries around the world, creating more demand. We should be tokenizing every asset class out there. So that's a core part of our strategy. We're also trying to build other types of financial services not related to trading, right? Like stablecoin payments are growing enormously year over year. We're building better borrowing and lending products. We want to revitalize capital formation and make that more efficient. America has the deepest capital markets in the world, but it's still kind of expensive to go out there and raise money if you're trying to build a real estate project or make a film or anything. And so we think crypto can update all these different aspects of the financial system, and that is growing our suite of products. I mean, we serve retail customers. We also serve big institutions and businesses. We have a developer platform that many of these banks are actually integrating to power their own products and services in a totally white labeled way. So there's a lot that we're doing. We're actually live in over 100 countries now. We have a strong presence in Europe and in Australia and the UK and Canada. We're looking to expand into areas in Asia, et cetera, and beyond. So we think that American companies need to win on a global stage, and that's part of why it's so important to get legislation like Genius and this new market structure bill, which I'm optimistic will get another draft and get it to a good place. That's what's really going to allow American businesses to thrive and spread all over the world.
And you're also looking at adding direct deposit?
That's right. A lot of people are starting to think of Coinbase actually as a place to just be their primary financial account. And so that starts with direct deposit. If they want to put their paycheck in there, and they can hold it in dollar stablecoins, or they can actually store it in Bitcoin or Ethereum, a number of other assets, and build a portfolio that can grow over time. Coinbase is currently storing about $500 billion of assets for retail and institutional customers. We think that it's very early days, and that number grew, by the way, about 5x over the last 3 years. And so I think we can ultimately be storing trillions of dollars of assets for our customers. The banks are going to have an important role to play here for a long time, but they're going to have to make sure their products are competitive, and they should be paying higher interest rates or rewards to their customers to make sure it's competitive.
And in terms of the timing on this, Brian, you said you're hoping that you can come together and get the better language that you would agree to. What is your expectations in terms of a timing on that markup?
Yeah, well, I defer to the Senate on the exact timing and when they're in session, and so that's not something that we control. What I can tell you is that everyone we've spoken to in the Senate and their staff are continuing, and the industry are continuing to work very hard on this bill to improve some of the language, make sure that we can come back to the table with a bill that really fulfills the president's crypto agenda and cements him as the first crypto president, and underpins that legacy. There's a lot of opportunities if we can get this bill right, but it's better to have no bill than a bad bill, right? And so if for some reason the banks it's a giveaway to the banks, or it prohibits entire categories of new products like tokenized equities, I'd rather have no bill. I mean, we can continue to operate our business today working with Genius Act and the existing regulators. Paul Atkins at the SEC, for instance, has been very forward thinking on this subject, and I think he's willing to go innovate here and provide clarity to the market. Now, it'd be better to actually cement it into law, but we're not going to do that if it harms ordinary Americans and it gives away too much to the banks.
Are you expecting all markets to be tokenized, Brian? Tell me what that looks like.
I am, yes. I think that tokenization is an important technology to improve all markets. Stablecoins are actually one of the first examples of that, where you store a dollar underlying in a U.S. Treasury, but you can have this one-to-one representation of that dollar, and it allows it to be sent instantly anywhere in the world for less than 1 cent. It just dramatically improves payments globally. We're now seeing that with other asset classes. They can get tokenized. I think tokenization of traditional equities would be amazing to get 24/7 trading. It increases demand globally for U.S. companies that can get tokenized like that. I think even these funds that people invest in through BlackRock and Apollo, the CEOs there, Larry Fink and Mark Rowan, have come out and said they think every fund that they manage could be tokenized, then that would increase demand around the world. When things are traded in a tokenized way, they have real-time settlement, right? So it eliminates settlement risk, it gets rid of a lot of the back office costs, and it just increases demand globally for all people all over the world who want access to these high-quality American assets.
And in terms of the constraints in that bill on decentralized finance, what can you tell us?
Yeah, so DeFi, or decentralized finance, is a very important part of crypto, and it's enabling a lot of these updates to the financial system I mentioned, like borrowing and lending, for instance. So it's very important for us that the centralized intermediaries like Coinbase, we're the ones who should be regulated under, the BSA AML rules, or getting these permission through the SEC and the CFTC. The centralized intermediaries should be regulated. But the decentralized protocols, or DeFi, those are infrastructure that no one company or country owns. And so there is no centralized entity to regulate. It's a little bit more like the internet or the telephone companies or something like that. It's infrastructure. That should not be pulled into the BSA AML laws. If that were to happen, it would be a dramatic expansion of BSA AML rules. This is a new technology. We've had to work closely as an educational resource with members of the Senate to try to make this case, but we saw some troubling language in the draft text that we were worried was written so broadly it could actually pull some of DeFi into the BSA AML rules.